Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Monday, the 23rd of August. Starting off with Abingdon Health, where there was an inkling that shares would turn around. That came on Friday with the very strong candle that we had opening at the low, closing at the high. Also, the stock was well into oversold territory in the sort of low 20s going into that. The last time we were in that kind of position was back in April, and there was a decent rally there from around, what was that, sort of upper 30s to upper 60s or maybe even 70p. It looks like we might repeat something like that. This rebound might be even stronger given the way that we've gapped higher from Friday, broken a resistance line there, a gap in the middle of a falling wedge, which is also another positive, and possibly up towards that July resistance line projection at 50 pence over the next couple of weeks, maybe even sooner than that, the way things are going for the shares. At this stage, early and end of day close back below Friday's peak at 31 pence, really delaying the upside scenario. Stock which has just been incredible, I think, is the only way to describe it, since it came to market, is Belluscura. Hit all the target, well, it sort of nearly hit all the targets because the higher target we've got here was 105, just sort of shy of that today. Breaking 105 could give us a new steeper line of ascent for the shares towards £1.30, which is the reason I'm covering the stock today. The other point to note, I suppose, is it's a very good lesson, this stock, in the sense that we've had gaps all the way up, unfilled gaps to the upside. The first one there in June, another one in July, in fact, two in July, and then two so far in August. So that's four. Normally they come in threes like London buses. So this is doing something special. So end of day close above 105, looking for 130 by the end of next month for Belluscura. Stock which hasn't been quite so sprightly is Challenger Energy, but might be the time to investigate the situation. First thing to note, obviously, is the way that the RSI has gone into deeply oversold zones, which can be helpful. The other point, though, is that the RSI, although it went oversold, is actually higher on this lower August low than we had in July. So that is a bullish divergence, does suggest that there's shares are being overstretched on the downside. The other point to note here is, or another point, is that the low in May was at 1.66 pence. End of day close above that today would mean that we're looking at a bear trap reversal, and that combined with the bullish divergence and perhaps an end of day close through 1.8 pence could take the shares up to 2.5 pence, perhaps as soon as the end of next month. So looks like Challenger Energy has a few plus points on the technical front at the moment. A requested stock, which seems to come from quite a loyal fan base of Eve Sleep, is the next stock here, and here, a bit similar to Abingdon, that we've got bullish divergence. We've got the gap higher from Friday after a very bullish candle there. Also, an end of day close today above the initial August resistance support, rather, at 3.05 pence could and should give us further momentum to the upside. Best case scenario, I suppose, at the moment is 4.3 pence at the top of that wedge from the beginning of the year. And that could be hit by the end of next month, all the while, as long as we hold above 3.05 pence on Eve Sleep. So looks like a bit of a turnaround there for that situation. Seen Bitcoin today above $50,000, which is very nice. And we've had for online blockchain a bear trap, a gap reversal, bear trap from below the low in May at 36.5 pence. So obviously overshot that by quite a long margin. The other thing to note here, if you're looking closely at the chart here, you'll see that there was a gap down to the lows back last month, and the shares actually gave us a decent buy signal, which I wish I'd seen at the time. End of day close above the top of that gap was a gap close reversal, and essentially got us into the stock, or would have got you into the stock in the low 30s. Currently in the mid 40s, and we've had another gap higher through the 50-day line and then held that level above the 50-day line at 40 pence, looking for significant further upside on online blockchain, probably up towards the 60s to 70 pence area, which was the resistance on the way down in early April. So above 40 pence, looking for 65 to 70 pence by the end of next month for online blockchain, especially if you believe in the recovery in the cryptos at the moment. Stock where the chairman has decided to leave, we've got Powerhouse Energy, and I suppose that was, or the run-up to that was the reason for the fall from near 5 pence down to 3.3 pence. Current situation, though, is that we've got a higher low there for the second part of August, and above that low there at 3.2 pence Friday's low, then there's a possibility of retesting the area of the 50-day moving average around 4.3 pence. But the stock not quite out of the woods yet, even though we've had that higher low. So let's just see how that pans out. But 3.3, a decent swing low level for those who are keen on betting on the aftermath of the chairman leaving the company. Stock which has decent fundamentals to back it. Pantheon Resources is back again here. Here we slid out of that channel that we had there before, which was obviously rather disappointing, but it does look as though we're still in a rising trend channel and have bounced off. And the reason for saying that is that we bounced off the 50-day moving average, which can very often be the trend channel floor there. That's at 48 pence, above 48 pence on an end of day close basis. We could be heading significantly higher towards 80 pence plus, maybe by the end of October. But obviously, in the meantime, above 48, we're looking for a retest of last month's resistance at 64 pence, perhaps by the end of next month. Interesting to see old support becoming, or old resistance rather, becoming new support for Pires. That was the 6 pence level. And if I can go back on the chart and see where we are on the bigger frame there, time frame, 6 pence became the July-August support. That was the old resistance and the second half of last year. Currently, though, we're seeing the shares edging higher, perhaps anticipating the next update from the company, which would be sometime next month. And while there's no end-of-day close back below the 50-day moving average around 7.1 pence, we're looking for the rising 200-day moving average at 9.75. The reason for being that optimistic or relatively optimistic is the way that that 200-day line is rising. That tends to provide momentum in a recovery situation. So it acts as a kind of magnet for a stock or a market in terms of recovery. Moving along to another stock which has been requested, Physiomix, and here it's been a slow mover, but I think finally we've broken that line of resistance from back in February. You could argue that the line is perhaps rather more accurately drawn as I'm trying to draw it at the moment, but still the shares are broken above that line, and that line there and the 200-day moving average at the same level, 6.75, above 6.75. We are looking at a bona fide recovery situation, at least a retest of June resistance at 7.75 should be on its way, which should cheer some people. And then obviously after that, we're looking for the best levels of the year through 9 pence. But at least above 6.75, looking for 7.75, which I think would be a decent start to recovery. Massive mention for Poolbeg Pharma in the Mail on Sunday yesterday from an illustrious journalist, but I suppose anybody writing for the Mail on Sunday is going to have the oxygen of publicity, and that certainly worked for Poolbeg. We hit the bottom of the range last week around 8.25 pence, and it's interesting that we've gapped higher today and held that gap. While there is no end of day close back below 8.25, or 8.5 rather, we're looking for a pretty swift break of the initial resistance at 11 pence for the shares. And typically, given that we've had a 3 pence range so far for the life of Poolbeg on the market, we'd look for a 3 pence breakout, so taking us to 14 pence on any end of day close above 11 pence. So that's something to watch out for. The idea of a break to the upside backed by the way that we've got that unfilled gap of support, that tends to be a strong signal. Moving along to Union Jack Oil, and here you can see that the shares have not only broken one resistance line, which they did last month, which I presume I covered at the time, but also a second one, which may be more serious. That's at 34 pence. That's also the level of the 200-day moving average. And that gives us enough confidence to say that while we're above the 200-day line at 34 pence on an end-of-day close basis, we could hit that January resistance line projection at 50 pence by the end of next month. Finishing off with a stock which was something of a favorite earlier in the year when the going was good, maybe in Q1. Yes, exactly. Just ending Q1 with a flourish for Webis, but looks like the shares are back again now, breaking that line of resistance from April around 3.9 pence. The longer we stay above that, the greater the chance of retest of June resistance through 5 pence by the end of next month. Added impetus provided by not only the rising 200-day line, but also that bear trap below the April floor there at around the 3.9 pence level. So that's it for me. More updates tomorrow.